Welcome back to the FX Titan Lab. In this video, we're diving deep into the key market moves from last week, and I'll break down exactly what I'm watching as we head into the new trading week. Whether you trade Forex, gold, or crypto, this is the insight you need to stay ahead. So let's get straight into it. Now, before we proceed, there are key points that we're going to go over. First of all, we're going to have the fundamentals. We're going to do a market recap, and we're going to now up into the live market, the live charts, and we do a little pre-market analysis before we take any trades. And there will be marking technical levels to watch as we get into this new week, and we frame ideas and get a bias of how the general market is going to move like. Okay, so first let's head over to Forex Factory, and here we are going to look at the news. But first of all, I would like to look at the news from last week. From last week, as you can see, predominantly we had red numbers for the US dollar. So what did this translate to, like, when we headed to the real markets? Well, on the real markets, if at all you open up your DXY chart. Okay. If you open up your DXY chart and you take a look at what the DXY was doing last week, we can see that the DXY was performing really poorly by creating lower lows and lower highs, meaning other pairs like gold, EURUSD, GBPUSD were doing pretty well, because these pairs are inversely correlated. So the purpose of taking a look at the DXY chart in correspondence to the news is to get a correlation between these markets that we generally trade. So we had many red numbers for the US dollar from Wednesday, Thursday, even Friday there was indecision, but predominantly these numbers before trumped the general trading bias for the US dollar. So anyway, people started to trade the dollar and buy up more of the other assets. Okay, then now going into this new week, what kind of news do we have, or what news do we expect to have? So starting off from here, Monday 16th June, which is today. We don't have any news today, but we're gonna have news starting from Tuesday up to tentatively Thursday. Okay, but I feel like from the charts, I expect the real moves to happen like from Tuesday, tomorrow, and then the moves will probably play through Wednesday and Thursday. So we'll be trying to get re-entries between Wednesday and on Friday into our given trend. Yeah, look at this. Now let's hop into the real charts. Okay, so again at DXY, we can see that it's just bearish price action, and that means that for this, I'd like to start with EURUSD. Okay. I like to start with EURUSD because actually, if at all you look at the EURUSD chart and the DXY chart, the EURUSD chart is like a flipped version of the DXY chart. You'll get that. You'll take a look into that in a way if at all you feel like. Here. Last week I had marked this level as the level for re-entries. However, price didn't come back into it, and price instead just kept on going higher and higher, which is fine. So by the time the last week closed off, price had created for us a new daily area of liquidity. Okay, and we're looking for daily areas of bullish, or we're looking for bullish areas of liquidity on the daily chart, simply because if at all you go to your monthly chart, the monthly candle is pretty much bullish. So anyway, and then given the fact that we are in the middle, almost like in the middle of the month, we want to look for what, for buy setups. Okay, so on the daily there was this area of liquidity, this little V, right? Then after that, I went to the 1 hour time frame. This is the daily area of liquidity shelf. So within this shelf, I would like to look for demand zones that price would probably react to. Now, in this zone, we had two demand zones. I had the first demand zone as here. I'm going to call this demand. And I had the second demand zone as this one right here. Okay. But I ended up taking this one above. Why? Well, if I told you to go to like the 4 hour time frame, I like to use the 4 hour time frame. You can see that there is nothing much to work with here, and the only clear zone is this one right here. So there is a much more higher probability that price will come to this zone and respect it, as opposed to coming to this lower zone. So this lower zone, nice to keep in mind, but for now, let's just keep it deleted and let's keep things simple. I've marked out this zone. This zone within the daily bullish area of liquidity. I'm gonna call this still a shelf. Okay, this area right here. Even if you just scale down from the 4 hour time frame to the 30-minute time frame, it's pretty much the same thing. You see pretty much the same thing. Okay, so that's the demand zone that we're going to focus on. You could right now it's like from this area of entry, it's like 10 pips, but I increase it to like 13. But then you can decide to just take this lower area. Then it becomes like 4.9 pips, your area for entry. But in order not to miss the move, I'd like to leave it the way it is, and I would like to get in at this figure right here. This is EURUSD, and this is how it is looking like. So yes, I had marked out this chart and say that price is going to come down by the time we open. And yes, this is going to be our targeted low. And yeah, so yeah, I expect price to first come back down here and then tap us in, and we go higher. Next on the menu is GBPUSD. Okay, GBPUSD. Why? Well, this is also a pair that I was looking at last week, though I did not include it in the other video that I made, but I'd also marked this area here. This was a daily area of liquidity, and as you can see, for GBPUSD, the price came back to that given daily area of liquidity, reacted properly, and then after that broke structure to the upside, and that price created for us a new bullish area of liquidity. This one right here. So as you can see, it's been a high time frame flip level, as you can see. So we're printing a change of guard pattern to the downside, but then we shifted and we flipped the script. So that's like how I like to keep it. Like, so okay, fine. We have now a new area of liquidity. So we're going to take that. Then we're going to go to the 1 hour time frame, and we look for a bullish order block. So we can take orders off of. Okay, so here there was, this was the initial entry from the previous area of liquidity. This one. Now price, as price stepped into this area, price first came back for a retracement. Let me first delete this because I think it's too much. Okay, so price first came to this area of initial entry. Then after that, price created for us a new area for re-entry. So price created for us one formation here, and there was this other formation down here. To see it a little bit more clearly, you'd like to go to like the 15-minute time frame, and then you look at that zone a little bit better. So as you can see it, this is how it looks like. So as you can see, there is this, or there is actually this untapped order block here, and another here. So I chose this one lower. Because this first one, I see that price first came into it, and then kind of like almost filled even the gaps that were there. And then down here, we have many gaps. We have a lot of insufficient pricing down here. So the liquidation process down here is, still fresh, you could say. And this was the first, on the lower time frame, this is the first area of transition, but I would consider this one above because it coincides with the one on the 1 hour time frame. And then I considered this as my actual shift, the actual confirmation that we are now bullish. Okay, so then above this zone, we actually had this order block zone here. And as you can see, price already had tapped into it. Price came back to it and tapped into it again, I think right here. Yes, then that was the reason why price went above and above. But then the thing was, price failed to break structure higher and higher. So these lows became targeted. This one, this one got targeted. Even this one, failure to push price to break this high here. This area got targeted again. Price again went above here, broke the structure here, but then failed to break above here. So this area is also going to get targeted. So yes, that's why I had also expected that price will also on GBP USD will come back down, and then we do a new change of character pattern to the upside like this, and we take prices higher. So this is how it's looking like. So this is how the setup on GBP USD is looking like. You can take a screenshot, and it's at this line right here. Let me see that line right there. Okay. Those are the coordinates for the line, whatever. Anyway, yeah. Now we are going to take a look at USDJPY. USDJPY is also one of the pair that I had marked up last week, so it's only right that we take a look at what the hell it's doing right now. Okay, so I remember last week I had also marked up USDJPY, and I marked this as the entry level for buys, and just as you can see, price reacted to that zone perfectly. But then personally, I executed it a little bit poorly because I had my stop loss down here like this. Yeah, I'll say it. Sometimes when you make your stop loss tighter and you go against your initial plan, well, you lose out. So yes, that's the thing that I did, and it cost me. But then again, I see anyway another area for re-entry has been created, and it's still fine. So anyway, let me show you this. So price, before we had made this analysis, we had our stop loss as was it 31? Yes. But then when I reached to execute, I don't know what got into me. I wasn't looking at the chart. I was just doing things off of hindsight because I was just looking at my phone. Then I instead placed the stop loss around there for like 10 pips or something. Yeah, then price waked me out at around 3 a.m. I woke up at around 4 in the morning, and 4 a.m. in the morning, and I'd already got waked out. I just left it. It was like on Friday last week. But anyway, I see that price has already created for us a new area for re-entry. So this is an area that I'm going to have in my new order at. And this time I'm going to have my stop loss as 25 pips, 25 pips or 30. I don't know. Let me see how it looks like on the 15-minute time frame. 5 minute. Okay, so on the 5-minute time frame, look at this. I see that there is a lot of, the liquidation process down here was complete. So that's why I chose this area right here. So yeah, having this as my area for re-entry is actually fine. Yeah, it's actually fine. So I'll just leave it as it is. First of that. So I'll leave it as it is. So this is going to be my area for entry, 143.171 up to like 22 pips. I increased it like 25. Yeah, 25 pips was good enough. It's good enough. And you can see there are a ton of order blocks inside this 5-minute area, inside this 1 hour area of liquidity. So there is this one, and there's this internal order block. So yeah, price will react to one of them and go higher. How is price looking like right now? We had closed off around here, so I'd expect the price to just dump, but then we can see that price is first gone up, and but then I still feel like price is going to first come back down and give us a re-entry. At least that's what I expect according to how the price is looking like right now. Failure to break above here with a proper wick body break will only show that sellers are in control of this market, and we'll first lower price levels. Cool. So USDJPY is done. Now we go to our favorite pair, that's gold. Now on gold, we had our levels also marked out perfectly. And as you can see right here, this was the area that I had marked out for last week. And that was the area that I was expecting price to come back to. And then as you can see, price came to that area perfectly. However, there was just a little thing that we didn't consider. We didn't consider these wicks down below. Well, even though we had increased our stop loss just slightly below the invalidation area, price came and wicked us out by something like 20 pips. 20 pips. So, but then actually eventually after price did this, it went higher and higher and even hit our target levels with ease. But then within the week, there were areas that we could have re-entered price on, like this area right here that was created on Tuesday. Just that we were a little bit distracted by the news and everything. We were shaken out of our position earlier, so our conviction had reduced. But there was this area right here that we could have re-entered in ads. And even this area here, I have a break of structure. But usually for me, once I did not get a proper area for re-entry for entry down below the down below the market structure of the trend. Let's say I want to be bullish. I want to first get an initial entry down below, and then if I come to enter now off of a breakout, I would like to use the profits that are being generated by this initial move as a buffer, so to increase equity and also margin, free margin, in order to open a new position. And in the event that this new position first goes into drawdown, because usually these orders here that are opened right after a breakout, as you can see even down here, usually price first does a retracement and then goes up higher. So you could even take a look at even what happened here. So maybe if at all is like, maybe I want to get in at this breakout here. If I do like good in at this breakout here, right? This breakout of this candle here, looking at the 1 hour candle. Then we had this retracement. I'll be like, okay, fine, it's okay. But then if at all I just held it out a little bit longer, well, I would have got liquidated here. Why? Because I didn't have an initial position. Maybe I have a smaller account, or maybe I'm using a higher lot size. I don't know. Things like that's why I usually like to have an initial open position, maybe lower. For example, when I'm buying, if at all I'm selling, I want to have that initial entry a little bit higher. So in the event that I open a new position, maybe here and maybe a retracement happens, it's still fine by me. So that's just a quick insight. And yeah, so we could have entered here, but then just price just left us. So yes, then there was also this selling area of liquidity that we had. This was like from the 4 hour time frame. As you can see, yeah, this was, where is it? Yeah, this red area here. So yes, but then price as price came to that area, it again wicked us out by like 14 pips. Yeah, it reached us up by 14 pips, so then eventually fell for something like 300, 400. Let me see. Price fell like for 377 pips. So, but then the strategy is good, but then there is something that I started to notice around these reversal areas here. These wicks tend to do to do a little damage. Like we can still navigate around it. We can still navigate around it as long as we see a failure of price to do a proper wick to body break. We can always go down to the lower time frame and we re-enter our positions and then we hold the trade. That's what I've seen. Even it's the same thing that we could have done down here, right here. There was another area for re-entry. Let me show you here on the 5 minute. Let me show you in 5. Okay. Let me show you in the 5 minutes how it was looking like. So as you can see here, right after the price was just out, we could have just waited for some little time. And then first there was this area here that had got created, but then usually after price does this, there is usually an internal order block that is usually within this area here. So yes, that's the area that you want to take, and then you just keep holding your trade, or maybe just wait for price to come back. Just these extremes over and over again, and then you just wait for a breakout. Yeah. So on the breakout right here, that's where you want to get into a new into some new positions. So yeah, let's take a look at the FX Open chart, because that's where I have the new setup for gold today. That was a recap for what happened last week, but let's now take a look at current price action. So yeah, right now we are in the daily time frame, and let's take a look at how the monthly is looking like. The monthly is looking bullish, and finally we have got some bullish price action in the monthly. So now previously we had the month of May give us this indecision candle, but now finally we have come into June, and June has given us the clear green light to go ahead, and we see that by last week we had cleared the high right here. We had cleared the high of June, no, sorry, of May. We took the liquidity of the high of May, and yeah, the next target is 3,500. So currently we're trading in the range of 3,000 to 3,500. Yeah, so we were actually spot on with the analysis, but just a few things just came in the way, and we just throw us off. But it's fine. It's fine. Right now, price create as last week closed off, price created for us a new area of liquidity, a new bullish area of liquidity to get in at. So as you can see here, we have this whole bullish area of liquidity. So I'm going to call this a shelf. So I'm going to go to the 1 hour time frame, and in the 1 hour time frame, the task is to look for fresh order block zones that we can take trades off of. Now, first we had this area here, this first area where we flipped. You see, you remember this is the area where this area came from, that 4 hour bearish area of liquidity. But remember, this is the area where we got wicked out. But yeah, anyway, price created first this other flip level, but then the problem was well, it didn't come from a proper order block zone. It almost came from a gap. This move, it almost came from a gap. That's why I didn't want to consider it too much. And anyway, down below that zone, there is a proper order block, and two, this order block also has a gap. So it has insufficient pricing. I have a fair value gap down here. So I'm having my limit order down here instead. So we can scale it a little bit lower. Let's go to now the 5 minute time frame, and we see the liquidation process what the hell is going on down there. So yeah, so first of all, let's just even take a look at this zone here. And then this bullish area of liquidity, because still, yeah, it is an order. Sorry, it is a zone to consider, but we can there are multiple levels within this area here, as you can see. But I expect that price might just maybe bounce a little bit, like from a level like this, 3,361. Price might just give a bounce. Even this one here, price 3,357. Price will just give a bounce. But then, given the fact that there are too many gaps here, price will want to fill those insufficient price areas. So and then eventually come to this area here. This is the ultimate level that I feel like will be the best to look out for. As you can see, there is this fresh 5-minute order block that hasn't got tapped, and this is where I have my order at, and I have the stop loss somewhere down here. So it's like 50 pips, 50 pips. Yeah, fair enough. It's gold. Just give it its breathing room and enjoy the profits afterwards. So yeah, we have insufficient pricing. So yes, we have a possibility, a higher possibility that price will get magnetized to this level, and as long as it does for us our proper confirmation patterns, even if it goes sideways in a way like this, because gold tends to move sideways before giving us that big push that we always need. It's still fine. As long as we get something like this, we will be able to ride the trend even higher. So from the daily, no, sorry, from the 1 hour. Yeah, 1 hour. This is how the price is looking like. And this is how, it's looking. We closed off around here on Friday, and I had expected price to take these lows here because these lows have created an area of least resistance. So usually these areas become targeted liquidity, or you can call them trendline liquidity. And yeah, most of the time they get taken, and then price goes to a proper demand zone, and we take prices to wherever the general trading bias is. So yeah, we've opened up here on Monday, and then we've, I think we're gapped up or something. Then yeah, price is probably coming down here to take these lows. So until we get into this area here, I'm not going to do this bullish area liquidity. I'm not going to take trades. I don't want to take trades on gold. I want to only take buy trades. How is Bitcoin looking like? This is just by the way, I'm not going to trade Bitcoin. Bitcoin is a little bit shady. Yeah, so after I remember I keep showing you guys this thing. Whipped me out here by 100 pips. Yeah, and I expected this low to get targeted now. And I think it's what's happening right here. So after price went up, like, these were how many pips? Let me first remove this. These were 700, 800 pips. Price hit some level above here. Oh, I didn't see it, but I'd already marked it out. So it hit that level and then set it to sell, but then I got whipped out here again. So this is the thing that I'm noticing. But usually, as long as we don't get a proper breakout structure, like with a wick to body break, the trade is still valid. So as you can see, if price first moves sideways, gold and Bitcoin like to do this type of stuff. So prefer to move sideways, then after that, so it fall in the predetermined direction. So yes, and yes, we are targeting this. You're right here. I'm going to delete this. And this is too much. Even this, that. Let's keep things clean. Okay. Yeah. This area also is now going to get targeted. I think the price is coming to some area of liquidity up here with, I think, within this zone. Let's see how it looks like on the 1 hour. Yeah, I think it's coming for some area of liquidity in this area here. maybe if I told let's just refine it and we see how it looks like. So on the 5-minute time frame, I'm going to shorten the zone to that. Let me see how it looks like on the 5-minute time frame. So whether there are other zones above. So yeah, this is the first area. So this is the first area that we can consider. And maybe there is some other area above here. But for now, we can just first have this one as the supply zone that price will potentially come to, and trade price is lower. Supply. So as you can see, because it has a gap, it has very big gaps. So these gaps represent insufficient pricing, and price will have to come back and rebalance that area. So this is a big this is a shelf for a buried area of liquidity, this whole area. And within the shelf zone, we have this supply zone. So this is the supply zone that I at least expect a reaction to push prices lower in Bitcoin and essentially take this low. And maybe we'll get to a better demand zone where we can push prices higher on Bitcoin. All right, that's it for now. So yeah, one more time, let's take a look at the setups. We have gold looking like that. We have USDJPY looking like that. We have GBPUSD looking like that. We have EURUSD looking like this. And we have Bitcoin looking like that. Okay, that's all for today. If you like the video, please consider to like, share, and subscribe, and I'll keep you guys posted.